With 90% of international trade transported by sea, landlocked Switzerland has become the world's second largest shipping power. Here to discuss further is Richard Watts, founder of HR-Maritime. Richard, thank you very much for coming in today.
Thank you.
Now, how, in your opinion, what would you say is the secret to Switzerland's shipping success?
Well, I'd say there are a number of things. First of all, there is the stability of Switzerland. The fact that you know that the regulations are going to stay the same, and once a decision has been made, it is likely to remain that way. Originally, when the trading companies started coming here in the early 1900s, we had a lot of the grain trading companies coming in to take advantage of the business between Western Europe and Turkey. Then it just grew from there. A lot of companies came in and established. Companies moved from France into Geneva, and because of this the banks developed to handle trade finance. And as this grew, it took on a momentum of its own, and we found now that we have a lot of the service companies, the inspection companies, the ship brokerage companies, the insurance brokerage companies in Geneva. And also we cannot ignore the fact that it's very, very easy to persuade people to move into Geneva and to keep people in their job in Geneva, which is not the case with some other cities in Europe at the moment.
I see. And with that in mind, though, how has it been affected by the global economic slowdown, would you say?
Well, it's been affected in a couple of different ways. First of all, Geneva, as the whole of Switzerland, has not been affected as much as the whole of the world in the global slowdown, but simply the fact that commodity trading is to supply the global markets. And so if there's a slowdown in demand for any type of manufactured goods, there'll be a slowdown in the demand for the raw materials. We found ourselves in a situation where you obviously need to buy the raw materials to build up the stocks in order to build up the stocks of your manufactured goods. And so at the moment, a lot of the companies that are selling goods in the marketplace are trying to reduce their stocks. And so there is a real problem with demand for commodities. At the same time, it's only in certain areas where there's the problem, because if we look at foodstuffs, wheat for example at the moment, the prices are booming because we have other factors which affect it. But if we look at iron ore and other cargoes like that which are going to China, the prices have never been this depressed because the demand in China is reducing.
So what would you say are the main challenges then affecting the shipping industry?
The main factors are simply the fact that shipping has very simple factors that affect it. You have the supply and demand side. On the supply side, the problem is that during the boom years between about 2004 up to 2007, shipping was doing very, very well. Ship owners were earning incredibly high return for their vessels, and so they were purchasing new vessels. They were using the fact that they were earning so much to be able to get very, very large loans to buy new vessels. And then suddenly the crisis came, there was less demand for the vessels, and a lot of these vessels which had already been ordered, you can't cancel them once they're already ordered, and so we have vessels at the moment which are coming into the market. The supply is still expanding when the demand has contracted very, very quickly. And so now there's a major oversupply, and so shipping rates are very badly affected. At the same time, it depends on the area of the market that you're looking at, because there are some parts of the market which are doing very, very well, like offshore for small vessels. But if you look at the large vessels, or what used to be the backbone of shipping, it's doing very, very badly at the moment, and we see more and more ship owners who are in financial difficulties.
So how can these challenges be overcome, do you think, then?
Overcome, I'm not sure that they can be completely overcome. I think that it's a question of each player within the industry has to be adding their own value. I think that the industry itself will be changing a little bit over the next couple of years, as it has over the last few years. Basically, there has always been a lot of trading companies who are basing themselves on the same business. Now we're going to find more and more large companies which take over the easier business, the more standard business, and we're going to have more and more small companies which take over the niche business, and the larger companies we're going to see more and more vertically integrated. And so that's why we see companies that used to be trading companies are now effectively mining companies.
And what would you say the future has in store for the shipping industry then?
Well, I think that shipping is incredibly cyclical. It has always been cyclical. It will rebound. I think that it might take a little bit longer to rebound than after the last depression in rates, but it will rebound at some point, and within the next 5-10 years it will be going up again, and probably within the next 10-15 years we'll be finding ourselves making exactly the same mistakes and purchasing too many vessels and then find ourselves in another crash.
So how can people in your industry manage the immediate future though?
Well, I think the immediate future is, as with any industry at the moment, it's a question of looking after the cash, it's a question of looking after your expenses and making sure that you keep your expenses to an absolute minimum. And there are often new projects that you can go for that are very, very lucrative new projects, but it's a question of identifying which ones are worth it and which ones are a complete waste of time. And I think that we're going to find more and more, as I said, the large companies which are just going to continue to expand and they're going to use the economies of scale, and the small companies are just going to focus on niches where the large companies don't particularly want to go.
With regards to Switzerland, obviously it's doing remarkably well. Do you think that on the local side it will actually continue to do so?
I think it will continue to do so. I think that Switzerland has been, well, Geneva in particular, has been in competition with some of the other capitals in Europe over the last couple of years in trading, particularly with Paris and with London. We've seen virtually all trading activities move out of Paris, to the extent of Dreyfus and Total both being based in Geneva now for their trading. There was a lot of trading coming out of London over the last couple of years, certainly metals. That's moving over to Geneva at the moment. And so one of the main competitors for Geneva now is going to be Singapore, and Singapore has the advantage of being right next to China and so can benefit from that market, but it also has the disadvantage of being next to China in that we don't really know what's going to happen in the next few months in China. I think there are going to be a lot of changes, and the fact that they are so close could end up being more of a liability than an asset.
Obviously always two sides to every story, but thank you very much, Richard, for your insight today. It's been a pleasure speaking to you.
Thank you very much.
Thank you. Now, that's all from Richard and myself for the moment, but click back to Dukascopy for plenty more interviews, press reviews and of course market updates throughout the day. Bye for now.